our selling and administrative expense budget. Okay, so this budget will show the variable and our fixed selling and administrative expenses. Again, it will show our variable and our fixed selling and administrative expenses. It says, based upon the information presented, our variable selling and admin expenses are going to be 50 cents per unit sold. Again, the variable selling and admin expenses are going to be 50 cents per unit that's sold. Then our fixed selling and admin expense are $70,000 per month. Again, our fixed selling and admin expenses are $70,000 per month. The fixed selling and admin expenses include $10,000 in costs, primarily depreciation. There are not cash outflows of the current month. So again, remember that depreciation is a non-cash expense. Let's see how that's going to impact our selling and admin expense budget. So for the month of April, you take your budgeted sales of 20,000 units. Recall that your variable selling and admin rate was 50 cents per unit sold, so the variable expenses would total $10,000. The fixed expenses total 70,000. Total expenses would equal $80,000. Now recall that 10,000 of the fixed expenses of depreciation, that's a non-cash expense. So at 10,000 subtracted from the 80,000, we expect to spend $70,000 in the month of April on selling and administrative expenses. We'll do the same thing for the month of May and June to get the total of those expenses, less the depreciation to get the amount of cash. So in total, we expect to spend $230,000 for the second quarter on selling and administrative expenses. This is another schedule that is part of our overall master budget, our selling and administrative expense budget. Okay, so now we've done our sales budget, our production budget, material budget, labor budget. We've done our overhead budget as well as our selling and admin expenses budget. So we're going to put those all together to what's known as a cash budget. So the cash budget is a culmination of those individual budgets. The cash budget has 4 distinct sections. Cash receipts, to show all the cash inflows. Cash disbursements, to show all of the cash outflows. Then we have a third section for our cash excess or deficiency, meaning at the end of each month, will we have a surplus of cash, a cash excess, or will we have a short of cash known as a cash deficiency? Depending upon if we need to borrow money, we go to section 4, our financing section. This shows that if there's a deficiency, we're going to have to borrow money. And see, that's why you plan ahead of time, you do a budget. This way, we're going to know ahead of time if we need to borrow money, and then we can make arrangements to whether get a loan, a line of credit, etc., to make sure that we have access to funds if there's a need to borrow money in order to reach our goals for the quarter. Okay? Here's some additional information about our cash budget. So we do have a line of credit that allows us to borrow money, but look at that interest rate. The rate is 16%. So if we borrow money from our line of credit, we have to pay a 16% annual interest rate. We want to maintain a monthly balance of $30,000. So at the end of each month, we want to maintain a monthly balance of $30,000. If we borrow money on the first day of the month, the goal is to repay the funds on the last day of the month. So if we need to borrow money, we'll borrow the money at the first day of the month, and if applicable, we'll pay the loan back at the end of the month. All right? We're paying out a cash dividend in the month of April only for $49,000. Again, paying out a cash dividend in the month of April only for $49,000. We're going to buy equipment. In the month of May, the equipment cost is $143,700. And in the month of June, we're going to buy equipment for $48,300. So you might need to pause this video and write down this information so when you see it on the next slide, you'll have it, okay? Now, at the beginning of April, our beginning cash balance was $40,000. Again, our beginning cash balance was $40,000. So we're going to take all of this information in addition to our sales budget, our expected cash collection, our production budget, our material budget, our labor budget, our overhead budget, our selling and admin expense budget, and combine this all together to what's known as a cash budget. So you ready? Let's do this. So we begin with the month of April. Remember that for the month of April, we had to begin with $40,000. We expect to collect in the month of April $170,000. That's coming from our schedule of expected cash collected that we did previously. So the total cash available for the month of April would be $210,000. Next, our disbursements. Disbursement for materials, disbursement for labor, disbursement for overhead, disbursement for selling and admin expenses, and in the month of April, we're paying out dividends. So these amounts are coming from the various budgets we prepared already. So our total disbursement for the month of April equaled $228,000. Now, if we only have 210 available, we expect to disperse 228. What does that mean? We're going to have a deficiency of $18,000 at the end of the month of April. And once again, that's why you prepare a budget to see whether we're going to have any bottleneck if there would be a deficiency at any time during the period. Now, also keep in mind that we said we want to maintain an ending cash balance of $30,000. In order to do that, we need to borrow $40,000 from our line of credit because we have a deficiency of $18,000, and we want to have $30,000 in cash available at the end of the accounting period. So once you borrow the $48,000, you will have $30,000 remaining at the end of the month of April. Okay? Now, recall that your April ending balance will become your May beginning balance. So we have $30,000 available at the beginning of May. This is showing the expected cash collections that came from our earlier budget for the month of May. This is showing all of our expenditures for the month of May. So notice for the month of May, the cash available exceeds our disbursements. So we will have a $40,000 excess at the end of the month of May. Therefore, we don't need to borrow any money during the month of May. Then comes June. This is showing again your cash collections, cash available, as well as all of our disbursements. So by the end of the month of June, we expect to have an excess of $130,500. So we can now pay back the actual loan of $48,000. But we can also pay back that interest. Recall that interest equals principal times rate times time. All right. So the amount of interest that has accrued from April 1st to June 30th was a total of $1,920. So we're paying back the loan, also the interest on the loan. So at the end of June, we now have available in cash $80,580. So this ending cash balance of $80,580 for the month of June will become our beginning cash balance for the next quarter. So we have more cash at the end of this period, $80,580, than what we had at the beginning of the period, which was $40,000. Okay? So make sure you understand how to prepare what's known as a cash budget based upon the cash inflows and all of your cash outflows. Okay? So we're almost done. We'll now prepare a budgeted income statement, and this will show the sales and expenses for the quarter. So again, these figures are coming from our various budgets. So remember, our total sales were $1 million. Our cost of goods sold, which is an expense that shows how much we pay for those items that are sold during the accounting period. Remember, we expect to sell 100,000 units. Our product cost is $499 per unit. So our cost of goods sold is $499,000. That gives us a gross margin or gross profit of $501,000. Our sale and admin expense came from that budget, total $260,000. Operating income $241,000. Interest expense was $1920,000. Therefore, at the end of the quarter, we expect to maintain a profit net income for $239,080. Not bad. And then last, we prepare a budgeted balance sheet. Some additional information. We already had land, common stock, retained earning equipment. We had these available at the beginning of the quarter. So we're going to add those to our balance sheet. And so here we're showing the cash, account receivable. Notice your inventory. Raw material inventory is showing the inventory before just the actual material. And then you have your finished goods inventory. Remember that we had 5,000 units at the end of the quarter at a cost of $499 each. This is our total assets. This is our accounts payable. Recall that the material that we purchased in the month of June, we only paid for half of it. So we still owe them $28,400. Common stock retained earning. Therefore, our balance sheet does balance. Our assets equal our liabilities plus our owner's equity. So there you have, ladies and gentlemen. We've completed all of the different schedules that make up what is known as our master budget. Okay, so again, we can put those all together and see the revenues coming in, the expenses, the expected profits, and we can see all the information. And again, these are just assumption estimations of what we expect to take place for the next quarter. Okay, well, that will end our Chapter 8 lecture. I hope you all enjoyed this information. Bye-bye.